European studies. In the meantime, though, a check of those markets. Here's Charlie Pellet.
Thank you very much. We cannot ignore the Ukrainian story today, front and center. Part of the reason for the rally today, with the Dow, the S&P, NASDAQ all surging, bonds falling with the dollar. Speculation that geopolitical tensions could be easing, overshadowing that data this morning showing U.S. inflation is still running hot. Equity market halting a 3-day drop as Russian President Vladimir Putin says he hopes for a diplomatic solution to tensions with the U.S. and its allies. Also announced a partial pullback of thousands of troops massed near the Ukrainian border. S&P up 60 right now. That is a gain of about 1.4%. We do have the Dow up 388, up by 1.1%. NASDAQ up 283, higher now by 2.1%. 10-year's down 15.30 seconds. 10-year yield 2.04% on the 10-year now. Spot gold down 0.9%, 18.54 the ounce. And crude pulling back by 3.5% right now. 92.05 for a barrel of WTI. Germany is set to join other European countries in phasing out COVID-19 restrictions over coming weeks. This according to a proposal published in local media. And Hong Kong's leader says the outbreak of the Omicron variant has overwhelmed the city's government, but denied she plans to impose a total lockdown like those in mainland Chinese cities. And within the past few minutes, Massachusetts officials loosened their recommendation on masks indoors, saying they're necessary only for those who are at high risk of being infected with COVID-19. Well, a major area of concern for health professionals has been reinfections. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
We shouldn't panic about reinfections. They're going to be what happens. All of us are going to get this coronavirus probably multiple times, just like we get other coronaviruses multiple times, but they're going to be mild because we've got all these tools to deal with them to make them much more likely to be like the other coronaviruses that cause 25% of our common colds.
Dr. Amish Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking the vaccine stocks that we check every weekday at the same time. Pfizer down 0.1%. Its German partner BioNTech, its ADRs up 5.7%. AstraZeneca's ADR is up 4.1%. Moderna up 5.2%. Johnson & Johnson up by 1%. Recapping, S&P up 59, up 1.4%. 10-year yield 2.04%. And that's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. We're speaking with Angela Stent, Senior Advisor for Center of Eurasian, Russian, and Eastern European Studies. Her most recent book, Putin's World, Russia Against the West and With the Rest, also was in the Office of Policy Planning at the U.S. Department of State, among many other roles. Angela, I want to talk to you about what tools the United States has at its disposal in order to curb potential Russian aggression. Apart from sanctions, what can the U.S. do?
Well, there's a limited amount to what it can do. Obviously, we've been arming the Ukrainians, trying to give them more resilience, supporting them. But as President Biden has said, and as is obvious, U.S. troops are not going to go and fight Russian troops if there were to be an invasion of Ukraine. We're both nuclear superpowers. We've actually never fought each other before, so that is off the table. The other thing we're doing is strengthening our NATO allies in the region, Poland, the Baltic states, Romania. We've deployed extra troops, both NATO and U.S. troops there, because, of course, if there were an invasion, it's not necessarily true that it would just stop with Russia and Ukraine. You know, Poland shares a border with Ukraine, as does Romania. So you'd have to be very careful that this didn't spill over into our NATO allies. So I think those are the tools that we have, and so far they have probably been effective in staving off an invasion. That is, if you assume that Putin did want to invade in the first place, and not that he's just been using this to gain other goals.
Okay, so I'm thinking about if you were putting together some documents for a presidential security team and advising them, what's the worst case scenario of what we are dealing with right now? What's the best case scenario? The best I can kind of get an idea of, Russia backs down essentially. What's the worst case scenario? You talk about that spillover into other NATO allies, and that makes me a little nervous.
Yeah. I mean, once you have a real war breakout, you can't predict what's going to happen. So the worst case scenario would be a full-fledged invasion, where the Russians go and they take Kiev, the capital, which they could do pretty quickly. And then what happens? The Ukrainian army is obviously weaker than the Russian one, but people will be fighting back. You just don't know in the fog of war what would happen. So you would have to try and make very sure that this didn't spread to some of Ukraine's neighbors who are NATO members. But that, I think, would be the very worst scenario. The best scenario is if there is no invasion and there are diplomatic talks. But even in the best scenario, this isn't going to go away. There is no quick solution to this. Russians want to reorder the European security order. So you could have this pressure going on. You could have Russian troops withdraw, then come back, and the pressure would still be on Ukraine.
How long does Putin stay in power?
Well, technically, he can stay until 2036. He had the constitution changed in 2020. In reality, I think he can stay as long as he likes. He's turning 70 this year. He runs for re-election again in 2024, but we could see him in office certainly until he's in his 80s.
You talked about best case scenario. You talked about worst case scenario. What about likely scenario here?
So I think the likely scenario is there isn't a full invasion, or there isn't an invasion at all. There is constant pressure on Ukraine to make concessions, including saying that it doesn't want to join NATO. And then there'll be constant pressure on the United States and Europe to renegotiate with the Russians, to accede to some of Russia's security concerns, to discuss so-called indivisible security with Russia. This could go on for a very long time, and I think that's the most likely scenario. We're not going to get back to the situation we were really before 2014, where we still thought we could work with Russia on a lot of issues. We are working with them still on some of them. But I think we're going to get back more to a Cold War type system where we have to rethink. We have to dust off George Kennan's writings from 1947, and we have to think about how we can contain Russia more effectively.
Who'd have thunk that this is the kind of conversation we'd be having in 2022? Angela, thank you so much for your insight and your knowledge sharing. Angela Stent, Senior Advisor at the Center for Eurasian, Russian, and East European Studies, joining us on the phone from D.C. Her book, Putin's World, Russia Against the West and With the Rest. She has served at the U.S. State Department and the National Intelligence Council, so really some smart insight when it comes to the situation.
Yeah, I mean, that's certainly what investors are focused on today, and what a different story it is today than it was yesterday, Carol.
Yeah, absolutely, and definitely plays out in the markets, the tone and the nervousness when it exists or it eases. All right, let's get back to world and national news. Nancy Lyons covering this and more from D.C. Hey, Nance.
Thanks, Carol. Republican senators have been successful in preventing a planned vote today on President Biden's 5 nominees for the Federal Reserve. Senate Minority Leader Mitch McConnell says they have major reservations about the woman that Biden has selected to serve as vice chair of supervision.
This slot comes with major unilateral power, but the president's nominee, Sarah Bloom Raskin, has spent recent years pressuring the Fed to stop being a neutral regulator and instead become an ideological left-wing activist body.
Again, Senator Mitch McConnell, the vote has been delayed because Republicans said they wouldn't show up, preventing a quorum. Well, as cryptocurrencies gyrate in value, dozens of enterprises are offering stable coins as a means of payment that can bypass banks. The Senate Banking Committee has been looking at whether it requires federal regulation.
Treasury Undersecretary Nellie Liang told the senators stablecoin could radically change the payment system, but there are questions as well. Can they equal $1 per coin as promised?
Are they stable? Can they provide the services that they offer? They have the ability to provide payments 24/7. To reduce the costs of payments. I think it has the potential to be part of the future payment system.
At the moment, regulation of stablecoin issuers is up to each state. In Washington, Irv Chapman, Bloomberg Radio.
The Super Bowl scored a big win with viewers. Just over 100 million watched the Los Angeles Rams defeat the Cincinnati Bengals. That's an 8% increase from last year's game. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, right here on Bloomberg Business Week. And this story certainly popped up on our radar. It has to do with Elon Musk giving away a big chunk of change.
Yeah, we were wondering what he was doing with all that money. He said obviously that was
I thought he was
when
paying taxes or
That's what I thought too. I mean, he did say
This
a lot
is
of
a way
it
to
was for
reduce
tax
that, right? Your
purposes.
taxable income?
Can you still do that?
I don't know. Can you?
I don't know if you can.
I thought if you like make donations, don't you?
I don't know if after the Trump tax cuts you can still do that. But then again, I'm not a billionaire, and there's probably add that list to the reasons why I'm not. But Elon Musk gifting almost $6 billion worth of Tesla stock to charity late last year in one of the largest philanthropic donations in history. The world's richest man, Carol, donating more than 5 million shares in the electric car maker from November 19th to November 29th. This according to a filing with the SEC. The gift worth about $5.7 billion. The filing doesn't name the charity and shows an unidentified trust was actually involved in the transaction.
Pretty cool gift. A large gift to charity, by the way, would help reduce what Musk has said would be the biggest tax bill in U.S. history.
it would.
Days before he completed a series of stock sales worth more than $16 billion, much of which was to cover the exercise of almost 23 million options. Those options, just the growth in the value of them was just off the charts. The CEO did tweet at that time he would pay more than $11 billion in taxes for this year. So asked and answered.
Perfect. So then I should think about that when I want to reduce my taxable income.
Note to
right?
self, Tim Stanovic.
Yeah, give away $5.7 billion worth of Tesla
we have
shares.
to give away these shares. What's interesting, though, he has faced a fair amount of criticism that a lot of billionaires have said. He'd said he would sell his homes and most of his positions. He's got a $227.3 billion fortune. He's more than $47 billion richer than the world's second wealthiest person, Amazon founder Jeff Bezos, according to the Bloomberg Billionaires Index.
So he's got a foundation, it's eponymous, that's become more active over recent years. It's got large 8-figure gifts promised to the city near his South Texas spaceport, a $100 million competition for carbon removal. I remember when he announced that. And then $5 million contribution to 2 scientists who are researching COVID-19. Before then, though, his foundation's largest contribution were to DAFs.
Just think if you are the charity, right? And you're like, get an email, get a call, and you're like, what?
Yes, please.
Yes, please. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks higher. We've got the Dow, the S&P, NASDAQ close to session highs right now. Bonds are falling with the dollar as speculation that geopolitical tensions could be easing overshadows data this morning that showed inflation is still running hot. Right now, we've got the S&P up 61, up 1.4%. The Dow up 380, up by 1.1%. NASDAQ up now by 301 points, up by 2.2%. 10-year yield 2.04%. Spot gold down 0.9%, 18.53 the ounce, and West Texas Intermediate crude oil down 3.8%, a retreat there to 91.83 a barrel. The FCC has adopted regulations to foster more competition for broadband service to the roughly one-third of Americans living in apartment buildings who often have only one choice for a provider. Among the names reporting after the closing bell today will be Airbnb. Shares up ahead of earnings by 5.4%. Recapping S&P up 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Well, in the upcoming issue of Bloomberg Business Week, we're talking digital currencies, Carol, and what China is doing specifically at the Olympics to show off that it has this digital version of its currency.
And I got to say, I love the opening lines to this story. China is competing for more than just medals at those games in Beijing. It's also quietly trying to define the future of money. So let's get more on this story. Bloomberg News reporter Joe Light with us on the phone in our Washington, D.C. bureau, along with Bloomberg Business Week editor Joel Weber on the remote access line in Brooklyn. You know, Joel, I feel like the U.S. and China are dueling on so many different fronts, but China really being aggressive when it comes to a digital currency.
Yeah, this is one where if any of us were in Beijing right now and we're attempting to interact with commerce, and I actually, you know, have been to Beijing in the before times, and it is actually incredibly difficult to pay for a meal, buy a souvenir, because you're really not part of their ecosystem. And that for the games, and you basically can just pay with a digital yuan. And that has led a lot of watchers of this space to look closely at it and say, could the U.S. ever get there, Joe? And what's the answer so far?
Well, I guess the answer is maybe. The first question is whether the U.S. wants to get there. The Federal Reserve just earlier this year put out a discussion paper, which is really supposed to be the start of a multi-year process of evaluating whether or not the U.S. will issue its own form of a central bank digital currency. And you know, even they're accepting feedback until May. Lawmakers are supposed to get involved and help kind of define the contours for what a U.S. CBDC would look like. But so far, central bankers, you know, are a little skeptical that it's necessary in the U.S. They see a lot of risk if we move forward.
Hey, Joe, you write about this in the piece, but I still need to get my head around this. The difference between this, a central bank digital currency, and just using your phone to pay for something, whether that is through a Chinese super app or through Apple Pay here in the United States.
Yeah, totally. That's a great question. And I think for, you know, most consumer transactions, it wouldn't look that much different at all. I mean, the way to think of a central bank digital currency is basically a replacement for the cash in your pocket. It's a liability of the central bank. And if you went to use it, I mean, basically you just use it, you know, probably just open an app, hold up a QR code, and the money would transfer instantaneously to whoever you're buying from. The big difference is what's happening on the back end. When you're using like Apple Pay or Zelle, there are intermediaries involved. If you're making an international payment, you know, you might have like your bank might have to talk to a correspondent bank, which talks to a correspondent bank in another country. That whole process, you know, for an international transfer can take days, and all those intermediaries are kind of taking their cut. Whereas with a central bank digital currency, that transfer would be happening, you know, instantaneously over government-controlled servers without those cuts being taken. So it's really more about, you know, what's happening on the back end when those payments are made. rather than the consumer experience, which would look pretty much the same, and, as it should, because it's pretty easy already, right? To use your phone to the paper stuff.
So it's safe to say that we're still figuring it out, and you definitely feel kind of the hesitation among some central bankers, even though they're moving steps or taking steps to embrace a digital currency at the central bank level. Having said that, what is the advantage? What is the first mover advantage if China is much more aggressive and moves faster than the U.S.? What is the advantage to a country and central bank that does that?
Yeah, so the key thing to remember that it's not just China who's developing CBDCs now. There are 87 countries that are in the process of exploring a CBDC, and China, even though it's a pilot project still in China, it's probably the largest economy that actually has something out there that's being experimented with. And that's an advantage because since you have all these other countries developing at once, they're going to start tailoring their own CBDCs to what the largest economies are working on. So if you're a smaller country and you want your CBDC to interact with China's CBDC, you're going to put in the privacy protections, the protocols, the sorts of things that the larger economy is kind of dictating to you. So if China gets too far ahead of the U.S. on setting these standards, and if the U.S. kind of remains relatively silent, they could end up dictating, what CBDC looks like worldwide, not just in its own country.
And so, bring it back to the U.S. here. Who are the naysayers who don't want to see the U.S. be at the tip of the spear here?
Yeah, so some of the central bankers themselves, some members of the Board of Governors of the Federal Reserve have expressed skepticism that it's necessary. Banks are against it, and one of the reasons banks, both banks and central bankers are against it, is that having a CBDC could lessen the amount of deposits that Americans keep in their banks. So if you're keeping a bank deposit, basically that's a loan to your bank, and the bank will take that deposit and end up, using it to fund mortgages, using it to fund small business loans. That whole, web of credit in the U.S. is very important. And a lot of people who studied CBDCs think that if people could, keep more electronic cash in their wallet instead of at a bank, they choose to do that. And if you reduce deposits in the U.S., by 10%, 20%, even something that sounds relatively small like that,
right,
that could potentially have big ramifications for, the cost of credit and the amount of credit that's available.
Interesting world that we're living in, and it's a great deep dive in terms of what China already doing. Thank you so much. Bloomberg News reporter Joe Light from our Washington, D.C. bureau, along with Bloomberg Business Week editor Joel Weber.
Well, February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now with your installment for February 15th, here is Bloomberg's Renita Young.
On this day in Black history in 1968, conductor Henry J. Lewis becomes the first African-American to lead a major symphony orchestra. He became conductor and musical director of the New Jersey Symphony Orchestra, which is a nationally recognized orchestra. From an early age, Lewis had a love for music and symphony orchestra. At 16 years old, he joined the Los Angeles Philharmonic and became the first Black instrumentalist in a major symphony orchestra. Later on in 1989, Lewis would become the principal conductor of the Netherlands Radio Symphony, a Dutch radio orchestra. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for that installment of Today in Black History.
All right, we've just got a few minutes before we're going to head over to our TV team and talk about the markets. They're bouncing around, but we're seeing some gains. Certainly some of those tensions, those concerns over Russia, Ukraine have eased, and that has let investors come back into the market. Tech, in a big way, outperforming. All right, you're listening to Bloomberg Business Week. Carol Master, Tim Stanovic. Get ready for Countdown to the Close.
the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in the trading session. Caroline Hyde, Romaine Bostick, Taylor Riggs, joined now by Carol Massa, Tim Stenovic. We pair across TV, radio, and we also bring in our YouTube audience to talk about, well, a decent rally, 2.2% higher on the NASDAQ.
Yeah, not too shabby, right? And check out the Philadelphia Semiconductor Index, the SOX. It is up right now almost 5%. We've got Intel doing a deal. You've got NVIDIA reporting tomorrow. Analysts expect an upbeat report from that company. So investors really piling into those names today.
Yeah, investors also piling into Bitcoin today. Bitcoin having its best day in more than a week, pushing through $44,000 for the first time since the end of last week. Caroline, Katie Greifeld on our show earlier talking about the correlation between Bitcoin and tech stocks looking closer and closer to one.
Yeah, I mean, risk asset. Did anyone just say that?
Yeah, I think so.
Oh,
You said it earlier.
Did you say relief rally too?
I think all of the above. Meanwhile, relief rally and tech stocks up 2.2%. Even as we see yields push higher, we see money move back into big tech, up 303 points on your NASDAQ. The S&P 500 having 61 points to the good. We're currently up 1.4% and 1.1% higher on the Dow. So even your cyclicals getting some love. We're up 390 points, let's call it, on that index. And Russell 2000, your outperformer, small caps, up 2.6%, Taylor.
And a little broad-based for Romaine. If we go down into some of the individual sectors, technology is actually really leading the way. The technology index, as we take a look at the first sub-sectors of the S&P, you're up about 2.4%. Otherwise, it does feel pretty risk-on, with materials and financials also leading the way. We've talked a lot about the steepening of the yield curve, at least for today. Down at the bottom, though, it's utilities. And energy, again, continues to lag, Romaine, even though it is sort of the best performer on the year.
Yeah, energy, once again, down at the bottom here. Exxon Mobil shares lower here on the day. Occidental, Apache, all of the names in that space are moving lower, down by about 1% to the upside. You mentioned it just a minute ago. Intel, of course, that deal to buy Tower Semiconductor, Tower shares up about 42%. That's basically the premium that you're getting on that deal. Intel shares themselves actually up 1%. Usually we tend to see the acquirer shares actually decline, but a lot of people think this could really be big for Pat Gelsinger and the path forward here for that company. And keep an eye on C, the big gaming company out of Singapore here. We're learning that Kathy Wood and her ARK investment ETFs bought more shares. In fact, according to Bloomberg data, she's basically bought shares of this company, ADRs, I should say, of this company almost every day so far this month here. So a big bet right now on mobile gaming and particularly on this particular company, which had seen the shares beaten down pretty much. Shares higher, ADRs higher by about 16%.
Maybe some good dollar cost averaging as well.
Kathy Wood loves a little bit of volatility. I'm going to show our TV audience and describe to our radio one what volatility looks like right now, because, I mean, Katie Greifeld, as you're saying, Tim, talking about how Bitcoin volatility is less than overall NASDAQ right now. We're seeing equity volatility still elevated, 25 on the VIX today. But what's continuing to power higher is the MOVE index, that sort of measurement of fear or indeed of volatility surrounding rates. This is a story of yields pushing higher on the day. This is a story of the Federal Reserve, of that PPI number, Carol.
Yeah, absolutely. So concerns about that inflation print. You know, it's interesting, that list of worries kind of grows, and it depends on the day. And today we did see an easing of tensions over what's going on in Russia and Ukraine specifically. We did hear from the U.S. Deputy National Security Advisor, Dalip Singh. He was talking with David Weston on balance of power, and he talked about what might be imposed against Russia and how it might impact the U.S. specifically. Check it out.
We have picked sanctions that allow us to deliver very meaningful impact on Russia with relatively limited impact on the U.S., Europe, and the global economy.
All right, and that is Dalip Singh, U.S. Deputy National Security Advisor. But it's just a reminder, right, that what we have to do when these things come up is, what is the impact ultimately, Tim, on the U.S. economy? How does it impact companies, and how will it impact what we see in terms of our outlook going forward?
Right, and there's still not a big understanding of, to the extent that the U.S. can respond beyond sanctions here, right? There's not really a political appetite right now, or an appetite from the Biden administration to actually do more when it comes to forcing Russia's hand. But how far are sanctions going to go?
Yeah, I mean, well, it remains to be seen, and we should point out that the reports about whatever easing of tensions are certainly a little bit conflicted between what we're hearing out of the Russians and what we're hearing out of some other nations. We're going to hear from the U.S. president potentially later this hour. I am curious here if you guys were paying attention at all to some of that inflation data that we got on the producer side, which, again, was high, and it was expected to be high. But I wonder if there's any sort of silver lining to some of the data that we got this morning.
Silver lining being that the Federal Reserve decides to move, that we get a 50 basis point move as soon as March, or indeed that you're starting to see.
Should they stop QE?
Good thing we're still buying bonds.
Taylor's second mention of the day about buying bonds.
I will say, Romaine, just to push back on you a little bit, I would argue, and I mentioned this at the last hour, a few analysts have noted that if you take a 3-month annualized basis, PPI is accelerating, not decelerating. So things aren't getting better, they're still moving quickly.
The chart we're showing here for our radio audience here, which shows the steepening here, is this a curve? Can we call it a curve? It's the PPI is basically a stair step up. Yeah, it looks like you basically just ran into the side of a cliff and basically are now
it's an incline, right? Straight up.
Is that the top, though? Do we start to go down from here?
It's not. If you're looking at 3-month annualized numbers, it's accelerating.
No silver lining.
I think what's interesting is Gina Martin-Adams was with us yesterday, and then she put out some research today and just talked about how companies are becoming the most pessimistic, especially companies in the S&P 500, lowering their sights for earnings growth. Analysts are taking the hint. They're bringing down their numbers. So everybody's starting to pull in the earnings expectations. Revenues, though, she still thinks will be maybe, I think, about 9% growth, which she says is pretty good.
Yeah, and I'm glad you bring up the idea of the idea of them being pessimistic. I know you kind of poo-poo some of the gains that we've seen in inflation, but people don't just look at these numbers. They really do look at kind of what they're seeing on the ground. And if at some point you hear all this chatter from people in the media like us, and you see some of this data, how does that affect economic activity? Do people then start, and for that matter, companies start to change their behavior, which only exacerbates the situation more?
Does it become a self-fulfilling prophecy? Do people at work ask for raises? Do companies have to give those raises? Do those raises actually end up surpassing the inflation that we're seeing?
Not in the UK.
Yeah,
exactly.
aren't they telling people in the UK to stop asking for wages increases because they're contributing to the inflation?
That's the head of the Bank of England.
That's
what the contributor. That's the new central bank policy,
it's
guys.
Fault. Take away his raise.
Oh, gosh. Wow. Aren't we all having evals here at the office? This could get a little tricky. All right, we're going to be back in less than an hour.
We're all getting puppies.
I'll take it. You and I are taken care of at this point.
They're expensive.
All right, they are expensive. So are kids. So is everything right now. All right, we'll be back in less than an hour for Beyond the Bell. Our cross-platform coverage will continue on TV, radio, and YouTube. We will be counting you down to the close on this Tuesday.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. We're going to head over to our TV team for the close in just about 50 minutes' time. But it's an interesting environment, but it is, in a word this year already, just volatility, right? Depending on what we're hearing from Fed or expectations, what we're seeing in terms of economic data, especially when it comes to inflation prints, and then you throw in the geopolitical stuff. There are so many things that you've already got a nervous investor. It doesn't take much to send either the stocks up or stocks down, or just financial markets just moving around a lot.
It also means the Fed has its work cut out for it. The Biden administration had its work cut out for it. But I think what you're saying, Carol, makes a lot of sense, because going into 2022, I think a lot of investors were thinking, okay, here we are, inflation is hot. We know that. What's the trade around that? What's the trade around what the Fed is going to do? What's the path of the virus moving forward? Are we past Omicron? And then, geopolitical tension.
Right, just when we thought we kind of had figured it out, and so, hence this is what makes this world kind of interesting, and certainly watching the financial markets. So, and there's a lot until we get to the next Fed meeting. We're going to get those Fed minutes tomorrow. We will be going through them, trying to get a better understanding of the conversations the Fed officials are having, right, to understand what's a priority, what does it take for them to be more aggressive when it comes to rates, and what does it take for them to start making changes substantially when it comes to the balance sheet.
So what do we look for in those minutes tomorrow?
Well, that's it, specificity, right? In terms of the arguments, what are the arguments and what kind of, debate is there within the Fed? I mean, ultimately it comes down to Jay Powell, right? He takes it all into account, but he makes, right, ultimately the decision. But I think that's what I'm going to look for, is specifics in terms of the things. What are the triggers that make them be much more aggressive? Is it the labor market? Is it inflation? They may not use transitory anymore, but they still think, right, largely that these will come down, these inflationary signs and readings that we've had.
And are the tools that they have the ones that are the right tools to bring that inflation down and in a quick way?
Yeah, exactly. That's a good point. Supply demand, you got to look at the equation. All right, Nance, take it away. World of Nash with Nancy
Thanks,
Lyons.
Carol. President Biden will be speaking about the latest developments in Ukraine this afternoon. We'll carry his comments live at 3:30 Wall Street time. Earlier today, German Chancellor Olaf Scholz met with Russian President Vladimir Putin, and Scholz sounded hopeful after Putin said he'd withdraw some troops from the Ukraine border. Scholz speaks here through an interpreter.
Now this has to be about working resolutely and with determination for a peaceful resolution to this crisis. The fact that we are now hearing that some troops are being withdrawn is definitely a good sign. We hope that more will follow.
German Chancellor Scholz. While Russia says troops are withdrawing, there's been no confirmation that those troops have moved at all. So the U.S. continues to map out its strategy if Russia does attack. Deputy National Security Advisor Dileep Singh tells Bloomberg they learned something from Russia's annexation of Crimea in 2014 and will take a different approach to sanctions.
There's a lot we had to learn. We never sanctioned a country as large as Russia, as complex as Russia, as connected as Russia. But we now know where the pressure points exist and how we can maximize impact on Russia while minimizing spillovers back to the U.S.
Singh says they have identified how to put the squeeze on the Russian economy. The families of 9 victims of the Sandy Hook Elementary School shooting have agreed to a $73 million settlement of a lawsuit against Remington, the maker of the rifle that was used to kill 20 first graders and 6 educators in 2012. Michael Bloomberg, the founder of Bloomberg LP, is a donor to groups that support gun control, including Everytown for Gun Safety. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Master, Tim Stenovic here at Bloomberg headquarters in our Interactive Brokers studio. So this story by Catherine Burton, Alex Wittenberg, and Hema Parmar has to do with Gabe Plotkin and Melvin Capital Management getting out of a position.
Yeah, we're learning more about what hedge funds are doing because of those 13F filings that came out yesterday. Melvin, for example, sold its entire position in MasterCard during the fourth quarter, a stake that it's held for more than 5 years. It also liquidated its shares of the Google parent company Alphabet as Gabe Plotkin sought to rebound from last year's losses.
It was a big position, unloading 2 million MasterCard shares. They're worth about $695.4 million at the beginning of the quarter, and it was one of almost 24 positions he got out of during the period, according to a regulatory filing that we got yesterday. Shares of the payments giant, which had been Plotkin's largest holding, are up about 4% so far this year.
Well, you got to look at this in the context, Carol, of what happened to Plotkin last year. His fund lost 39% in 2021, but seeking to rebound after that loss, he's opening a dozen new positions. That includes Marvell Technology Inc., Uber Technologies. They've tumbled 23%, I should say, for Marvell, and Uber's down 18% so far this year. The hedge fund losing an additional 15%, Carol, in January.
Listen, 13F filings are fun. Remember,
They
they're
are
backward-looking, so you don't exactly know whether
But they
these...
still sometimes move stocks.
Oh, absolutely. But you don't know if, did they get out and did they get back in? Like, you
Right.
just don't know that. And you just have to remember that they're backward-looking. And some other key takeaways from the fourth quarter of 13F filings, mixed bets on Netflix. I guess you had some selling and some buying. Funds cycling out of Peloton Interactive.
Oh, I see what they did there.
Yes, nice, right?
This was my favorite, though. Berkshire Hathaway, okay? Glenview Capital Management making profitable bets on Activision Blizzard. It, of course, has surged 23% this year because of that January announcement that Microsoft is acquiring the video game maker. That was a quick one from Berkshire Hathaway.
Not too shabby.
Yeah.
When it comes to family offices, Stanley Druckenmiller's Duquesne Family Office getting out of Facebook parent Meta Platforms just in time. The stock has plunged 35% this year. Talk about a nice call.
Good call.
Not too shabby. Anyway, you can read more. Just go to Bloomberg.com or check it out on the Bloomberg terminal. This is Bloomberg.
And good afternoon, Charlie. U.S. stocks in the green today. From the start, they were helped up by reports that some Russian troops are returning to their regular bases. Dow's currently up 392 points. S&P's gained 65, while the Nasdaq is higher by 323. The U.S. 10-year yield at 2.04%. Gold is down 16. Oil is sinking, and Bitcoin is higher by 4%. Among the main 11 S&P sectors, only energy and utilities were in the red, and leaders to the upside in the Dow, Boeing, and Salesforce, while Chevron and Amgen led to the downside. After earnings, Arista Networks rose as much as 8%, and in deal news, MoneyGram to be acquired by Madison Dearborn for $11 a share in cash. In other news, hackers attacked Ukraine's defense ministry, army, and state banks. And wrapping things up, Airbnb, Akamai, and Roblox. I'll report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney.
Okay, we thank you very much, Melanie, here live. Breaking news over your Bloomberg Times Squawcast, QUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, appreciate the update. Well, it is today's Bloomberg Big Take. It's also among the most read on the Bloomberg terminal about the unknown hedge fund manager that you may want to know about. Why? How about 2 billion reasons why?
Yeah, we're talking about Karthik Sharma, out-earning the likes of Steve Cohen last year.
Wait, what?
Yeah, I know, seriously. Well, that's why we have Hema Parmar in here, who's hedge fund reporter for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studio. Check out Hema's story and more from the Bloomberg Big Take. It's on the Bloomberg terminal and, of course, at Bloomberg.com as well. Hema, who is Karthik Sharma?
So Karthik Sharma, as you mentioned, he is a very little-known hedge fund manager. People hadn't really heard about him much until the past year. But he runs SRS Investment Management, which is a hedge fund that manages about $8 billion. And he used to work at Tiger Global, which is one of the preeminent funds that has long-term success.
So is he considered a Tiger Cub?
He is considered a Tiger Grand Cub, actually, because Tiger Cubs come from Tiger Management. But yes, from this lineage of very successful managers. And he has a very strong reputation. And so what's interesting is that he made this very big bet on Avis, the budget car rental company. And that earned him $2 billion that he made personally last year alone. His hedge fund was up about 35%. So investors did well as well. And this was an 11-year-old bet on Avis that he had held. And when the stock grew like 400%, it paid off very well for him.
You write in the story that this wager was an unusual one for him.
It was. So he's not sort of the typical hedge fund manager, and he doesn't take a lot of leverage on like many funds do, and he actually runs a robust short book. But he took a pretty sizable position in Avis, which is atypical for him, and he took a seat on the board, which you don't see a lot of funds wanting to do. So this was unique for him, but it's based on this belief that any company that owns a fleet of cars is going to do well in the Uber of the future environment where people are relying on these modes of transportation.
How lucky was it, though? When did he first get into it? Because it was
11 years ago.
So it was a great pandemic play, right? Were people renting and then it became a meme stock? There was a lot of stuff.
There was the meme thing that went
special.
on. Yes, exactly. So he held this for a long time, but then there was a big meme stock bump that helped, and he cashed out a little bit. I think he took 5% of profits. But it's still in the position, and it has still in.
Well, speaking of the pandemic, where was Karthik riding out the pandemic? Was it the Hamptons? Was it Aspen? Maybe outside of the United States on a yacht somewhere? Where was it?
Aspen, yeah. So that's a very good question. But a lot of the hedge fund managers fled to places like Florida and Aspen or someplace beautiful and luxurious. He actually moved to New Jersey and has spent some time with his family there.
Carol's raising her hand, and she's basically saying, okay, the New Jersey is the Hamptons of New Jersey.
There you go. And he spent time with his family in a more modest home, and so it's a bit of a unique, which is completely fine, but definitely a bit of a unique trend.
Yeah, and I think
for like a
billionaire, somebody earned a couple $1 billion. What's he like?
Well, these hedge fund managers are quite private and don't always want to comment and don't want to necessarily engage. So everything we've heard about him is that he is well respected, that he has a good, his investors are certainly happy. Modest, down to earth is the reputation.
So he's getting attention because of this, outperformance, especially among the establishment in the hedge fund community. Has he? I would assume that 11 years, been a consistent performer. What do we know about his consistent performance?
there's not a whole lot of like detailers to going back all those years, but he's got it's tricky. But he is known for being a strong performer. Obviously, this has been quite a significant year for him. But if we look at some of his numbers, even in the past 2 years, he's produced double-digit gains. 2021 was a very strong year. 2020 and the year before were still, single to double-digit gains. But making him, one of the strongest performers. And, we do this ranking of hedge fund managers who made the most last year. And we see some very common names appearing on our list every year. Ken Griffin was on it this year. Chris Hone, both were on last year. Izzy Englander. These are names you expect. But we saw some new names, and Karthik being number 3, beating the likes of Steve Cohen.
I can just see the newsroom when stuff starts to pop up. You're like,
who? What?
I just see the news, right?
Yeah, and it's nice to see some fresh faces on this list. Steve Schoenfeld, Richard Michel, these are also newer names that made the top 15 list. Where's calculations? No women. Okay. There hasn't been a woman on the top 15 list. Unfortunately, fingers crossed the one day that happens.
Hey, how have hedge funds done? How have they done in 2021?
Yes, so there's a bit of dispersion. You see some outperformers. Some funds doing very well, like the multi-strategy funds, like the Citadels, the Millenniums. Those did very well. Some multi-strats like Point72 didn't do nearly as well compared to like a Citadel. The quants struggled a lot in 2020, but made a comeback last year. So Renaissance, terrible year 2020. 2021, double-digit gains, did bounce back. Investors still redeeming from Renaissance because they were not thrilled with that first very difficult year. So they still have seen $15 billion in outflows and redemptions alone in like 14 months.
You're such an outperformer for so long. Just generally 20 seconds. Is more money though in general overall is continuing to come into hedge funds?
Yes, the hedge fund assets globally are, I think they topped $4 trillion now. They're generally going to the bigger managers, the bigger players. A lot of money, small amount of hands.
Still a lot going on. Love this story. It is among the most read. We said it's the Bloomberg Big Take. Read it in its entirety. Just head to the Bloomberg or Bloomberg.com. Hema Parmar, she's hedge fund reporter at Bloomberg News in our interactive broker studio. So good to see her. You're listening to Bloomberg Radio.
President Putin to make clear that we are ready to keep pursuing high-level diplomacy, to reach written understandings among Russia, the United States, and the nations of Europe to address legitimate security concerns, if that's his wish. Theirs, security concerns, and ours. President Putin and I agreed that our team should continue to engage toward this end, along with our European allies and partners. Yesterday, the Russian government publicly proposed to continue the diplomacy. I agree. We should give the diplomacy every chance to succeed. And I believe there are real ways to address our respective security concerns. The United States has put on the table concrete ideas to establish a security environment in Europe. We're proposing new arms control measures, new transparency measures, new strategic stability measures. These measures would apply to all parties, NATO and Russia alike. We're willing to make practical, result-oriented steps that can advance our common security. We will not sacrifice basic principles, though. Nations have a right to sovereignty and territorial integrity. They have the freedom to set their own course and choose with whom they will associate. But that still leaves plenty of room for diplomacy and for de-escalation. That's the best way forward for all parties, in our view. We'll continue our diplomatic efforts in close consultation with our allies and our partners. As long as there is hope of diplomatic resolution that prevents the use of force and avoids incredible human suffering that would follow, we will pursue it. The Russian defense minister reported today that some military units are leaving their positions near Ukraine. That would be good, but we have not yet verified that. We have not yet verified the Russian military units are returning to their home bases. Indeed, our analysts indicate that they remain very much in a threatening position. And the fact remains, right now, Russia has more than 150,000 troops circling Ukraine and Belarus along Ukraine's border. An invasion remains distinctly possible. That's why I've asked several times that all Americans in Ukraine leave now before it's too late to leave safely. It is why we have temporarily relocated our embassy from Kyiv to Lviv in western Ukraine, approaching the Polish border. And we've been transparent with the American people and with the world about Russia's plans and the seriousness of the situation so that everyone can see for themselves what is happening. We've shared what we know and what we're doing about it. Let me be equally clear about what we are not doing. The United States and NATO are not a threat to Russia. Ukraine is not threatening Russia. Neither the U.S. nor NATO have missiles in Ukraine. We do not have plans to put them there as well. We're not targeting the people of Russia. We do not seek to destabilize Russia. To the citizens of Russia, you are not our enemy. And I do not believe you want a bloody, destructive war against Ukraine, a country and a people with whom you share such deep ties of family, history, and culture. 77 years ago, our people fought and sacrificed side by side to end the worst war in history. World War II was a war of necessity. But if Russia attacks Ukraine, it would be a war of choice, or a war without cause or reason. I say these things not to provoke, but to speak the truth, because the truth matters. Accountability matters. If Russia does invade in the days and weeks ahead, the human cost for Ukraine will be immense. And the strategic cost for Russia will also be immense. If Russia attacks Ukraine, it will be met with overwhelming international condemnation. The world will not forget that Russia chose needless death and destruction. Invading Ukraine proved to be a self-inflicted wound. The United States and our allies and partners will respond decisively. The West is united and galvanized. Today, our NATO allies and the alliance is as unified and determined as it has ever been. And the source of our unbreakable strength continues to be the power resilience, and universal appeal of our shared democratic values. Because this is about more than just Russia and Ukraine. Because this is about standing for what we believe in, for the future we want for our world, for liberty, the right of countless countries to choose their own destiny, and the right of people to determine their own futures, for the principle that a country can't change its neighbor's borders by force. That's our vision. To that end, I'm confident that vision, that freedom will prevail. If Russia proceeds, we will rally the world to oppose its aggression. The United States and our allies and partners around the world are ready to impose powerful sanctions on export controls, including actions that we did not pursue when Russia invaded Crimea and eastern Ukraine in 2014. We put intense pressure on their largest and most significant financial institutions and key industries. These measures are ready to go as soon as if Russia moves. We'll impose long-term consequences that will undermine Russia's ability to compete economically and strategically. And when it comes to Nord Stream 2, the pipeline that would bring natural gas from Russia to Germany, if Russia further invades Ukraine, it will not happen. While I will not send American servicemen to fight in Ukraine, we have supplied the Ukrainian military with equipment to help them defend themselves. We provided training and advice and intelligence for the same purpose. And make no mistake, the United States will defend every inch of NATO territory with the full force of American power. An attack against one NATO country is an attack against all of us. The United States' commitment to Article 5 is sacrosanct. Already, in response to Russia's buildup of troops, I've sent additional U.S. forces to bolster NATO's eastern flank. Several of our allies have also announced they'll add forces and capabilities to ensure deterrence and defense along NATO's eastern flank. We'll also continue to conduct military exercises with our allies and partners to enhance defensive readiness. And if Russia invades, we'll take further steps to reinforce our presence in NATO, reassure us for our allies, and deter further aggression. To be clear, if Russia decides to invade, that would also have consequences here at home. But the American people understand that defending democracy and liberty is never without cost. This is a cause that unites Republicans and Democrats. And I want to thank the leaders and members of Congress of both parties who forcefully spoken out in defense of our most basic, most bipartisan, most American principles. I will not pretend this will be painless. There could be impact on our energy prices. So we are taking active steps to alleviate the pressure on our own energy markets and offset raising prices. We're coordinating with major energy consumers and producers. We're prepared to deploy all the tools and authority at our disposal to provide relief at the gas pump. And I'll work with Congress on additional measures to help protect consumers and address the impact of prices at the pump. We are not seeking direct confrontation with Russia, though I've been clear that if Russia targets Americans, Ukraine, we will respond forcefully. If Russia attacks the United States or our allies through asymmetric means, like disruptive cyber attacks against our companies or critical infrastructure, we are prepared to respond. We're moving in lockstep with our NATO allies and partners to deepen our collective defense against threats in cyberspace. Two paths are still open. For the sake of historic responsibility, Russia and the United States share for global stability, for the sake of our common future, to choose diplomacy. But let there be no doubt.
Saying several times that NATO is not a threat to Russia. The United States, not a threat to Russia, but at the same time saying that Americans should leave Ukraine now before it's too late.
Yeah, he also alluded to the moving of the embassy outside of Kyiv. He said that the president's saying that we should give diplomacy every chance to succeed, and that Putin and him agree that we should continue to engage.
And bottom line, just one other thing that we've seen certainly impacting the financial markets today, the president saying we have not yet verified Russian military units returning, which is something we have been hearing some reports that Russia was pulling back, and yet the president saying that we have not, the United States has not gotten confirmation of that.
Well, let's continue with world and national news and check in with the latest from Nancy Lyons in Washington, D.C. Hey there, Nance.
Thanks, Tim. You all have been summarizing what President Biden just said. He says Russia may be claiming that it's withdrawing troops along the border with Ukraine, but the U.S. has yet to see any evidence of that. Biden says there is still room for diplomacy, but Ukraine must be able to make its own decisions on NATO.
Nations have a right to sovereignty and territorial integrity. They have the freedom to set their own course and choose with whom they will associate. But that still leaves plenty of room for diplomacy and for de-escalation.
Biden says if Russia does attack Ukraine, it will be a war of choice. He says the battle would come with an immense human cost. He says if Russia does proceed, the U.S. will rally its allies to push back against Russia, including tough sanctions. Families of 9 victims of the Sandy Hook Elementary School massacre have agreed to a $73 million settlement with Remington, the maker of the gun used in the deadly 2012 attack that claimed 26 lives. Bill Sherlock lost his wife and says today's settlement should send a message to weapons manufacturers.
The cost of business is going to go up substantially, and you will be held accountable in many of your practices.
Sherlock says ammunition from the AR-15 that was used in the attack travels 3 times as fast as a handgun bullet. Michael Bloomberg, the founder of Bloomberg LP, is a donor to groups that support gun control, including Everytown for Gun Safety. Republicans on the Senate Banking Committee today blocked votes on President Joe Biden's 5 picks for the Federal Reserve in a dispute over Sarah Bloom Raskin's nomination for vice chair for supervision at the central bank. The top Republican on the committee, Senator Patrick Toomey, said Raskin had not adequately addressed questions put to her. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
Thank you so much for that update, Nancy Lyons. Charlie Pellet, we did see stocks take a little bit of a hit when President Biden was speaking, but our
and West Texas enemy. Among the names, and there are many of them reporting after the closing bell today, Airbnb shares up now by 5.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, got about 14 minutes left in today's trading session. We did see the S&P 500, NASDAQ 100 both pair some gains as President Biden was speaking there from the East Room, but just slightly. I think it was about a 12 to 14 point move to the downside on the S&P, but then we've bounced back off of that. So I would say overall, as Tim, you were noting too, kind of little change in terms of market reaction. Let's get to it. Let's get to the drive to the close.
Mace McCain is Chief Investment Officer at Frost Investment Advisors, $5.1 billion in assets under management. Mace joins us on the phone from San Antonio, Texas. Mace, how are you?
I'm great this afternoon, enjoying this up market.
Well, it's been choppy though. It's today is certainly up, but yesterday was a different story, and year to date we're down on the major indices. What are you hearing from clients right now? What are their concerns?
There was some concern with the increases in the potential increases in the Fed and rates, but I think we'll be looking past that. Typically, when we get the first rate increases, we're up 12 months later, and we think that pattern holds. So we're counseling people to hold tight, that things are the rest of the year is going to look better.
All right, does that matter if the Fed, let's say, comes out of that March meeting and is very aggressive and does a 0.5 point increase when it comes to rates? Will investors feel confident at that point, or are you talking about gains that come later in the year, maybe when a lot of the moves by the Fed are already done?
I think by mid-year we'll be looking better on the market. The odds of the Fed going 25 or 50, I think, are about equal now. It could be either. But I just don't see the Fed getting overly aggressive when we still have unemployment numbers below where we started. We still have 2.5 million people that we're trying to get into the workforce.
Hey, what is the main concern right now that you have when it comes to thinking about asset allocation? I've been asking a lot of our guests to weigh in on how they're thinking about asset allocation for their clients in a time when a lot of people are arguing that there's really not a big reason to have fixed income in a portfolio. What are you telling clients right now?
Well, I think the fixed income is serving a very important function. Of course, we're keeping ours fairly short. So we had positive returns last year in our funds because we're keeping the income high and the duration short. So we're not taking a lot of price risk. We're still positioned that way. And I think it's still important to have that fixed income component. If the Fed makes a mistake and we head towards recession, the stock market could be very vulnerable. So people will be loving the fixed income if we get in that situation.
A lot of ifs and buts, right? It seems at this point. Is that fair that we know when the Fed enters a rate hiking cycle, and then we've got the balance sheet to deal with as well, that while certainly equities tend to go up early in that cycle, the Fed, it's not an exact policy guide, right? Or there's not an exact playbook in terms of how the Fed needs to do this. And certainly coming off of the unprecedented times that we had, likely many say that the Fed's going to make a policy mistake. So for investors thinking about that, how do they ride it so that they're not, riding the volatility, which is, as you know, a tough thing to do?
I think the Fed's in a very difficult position. They have dual mandates of full employment and an inflation target, and the inflation target's coming way in hot, and their full employment mandate. We still have workforce participation well below what the normalized rate is. So they're not achieving either mandate today, and it's going to be very hard for them to get there, and as you point out. So I think that them being able to land this plane without making a big policy mistake is the odds are way against them.
So, Mace, does that mean that you think they're going to have to do something drastic in the sense of an increase of 50 basis points perhaps at the next meeting?
They may do 50, but we are in the camp that we don't think they'll be able to sustain rate increases for very long. We have a lot of debt in the system. And the consumers are pretty quickly spending down all the government incentive checks that they were giving during the pandemic, and we just don't see the big driver to the economy going into later this year and into 2023.
So I'm curious, Mace, new money that comes in, you guys work with a lot of institutional investors, pension funds. Where does that new money, where are investors asking you to put that money at this point? And I understand that they invest for the long term, but in this kind of uncertain still environment, as some would say, where is that new money flowing to?
So we're continuing our asset allocation with generous allocations to equities, but we have our eye on the door. We are looking for the Fed mistake. We're looking at the potential 2023 recession. And so we're just being very vigilant about when we may want to become more conservative and allocate more into the bond market.
Still U.S. equities or equities outside the U.S. while still keeping your eye on the door?
Primarily U.S. equities, especially the growth stocks and the ones that have been so successful. And we've been underweight Europe and international equities for a while. We just were betting on the U.S. recovering first.
Is that something that you see continuing to play out in 2022?
I do. I think the next big move in our economy is inventory growth factor as it just starts to slow down a little bit.
Just to rehash, we're just about 8 minutes away at our high of the session, so up 1.6%, or up almost 71 points on the S&P 500, 4472. Dow Jones Industrial Average up 441 points for a gain of 1.3%. NASDAQ, the outperformer, that average up 2.5% here. And Tim, we're looking at about 348 points higher. But again, you're seeing us, certainly on the S&P and the NASDAQ, pretty much at our best levels of the session.
Mace, Carol brings up a really good point that investors seeming to take President Biden's comments about Russia and Ukraine in stride. Why do you think that is?
I don't think that the prospect of war is a big driver here. There just isn't enough upside for them. There's a chance for them to getting bogged down. There's just not the probability of them trading into that and facing the sanctions. I think there's really large disincentives. So I just don't see that moving forward.
Having said that, you said some of those big tech names, and it was interesting. I came across a story, I think it was B of A, that was talking about specifically that in terms of investors holding on to tech shares, I think it was at one of the lowest levels that we've seen in some time. B of A clients most underweight on tech stocks since 2006. That was their latest Bank of America survey. You like, though, technology?
I do. I think our forecast on interest rates is probably a little bit more benign than the consensus.
Yeah. Do you think investors at this point in the markets in general are just getting kind of crazy when it comes to rate hikes?
I do. When I'm seeing 7 and 8 rate hikes, I don't think our economy is strong enough to sustain 7 or 8 rate hikes. I don't think the Fed is going to look at the employment numbers anytime soon and believe that they can raise that much.
So does that does that take us back to the recession comment that you made earlier, and why you think there will be a recession in 2023? What makes you say that?
I think there's the debt in the economy, and the consumer is, we're hitting a cliff on the stimulus. Year over year, the stimulus is going to have been taking money basically out of the economy. And I think that there's just not a driver there after that happens and after the inventory build is complete.
We talked earlier with our Kriti Gupta of our Bloomberg Markets correspondent who's been watching very closely the energy sector. We did see oil dip back a little bit and talked about the correlation between that and what we saw in the rise in U.S. stocks. Energy, though, by and far still, your outperformer among the 11 major industry groups in the S&P 500. It is up 22% so far this year. You still see opportunities there?
Yes, we're sitting in San Antonio. We have a front row seat to what's going on in energy, and I would say there's been a really large underinvestment in energy, and we're going to see the outcome of that as the economy worldwide starts to open up. I think we're going to be consistently short on oil and gas and a lot of other commodities as we reopen.
So even though you think 2023 is not going to be pretty, you're not ready to move new assets to cash or over-index, at least when it comes to asset allocation on cash or on bonds at this point. You're still you're still over-indexing on equities, right?
Yes, we're seeing really strong price increases today. Yeah. We think we're going to see really good earnings reports. We will be watching the Fed very closely to see if they make the mistake that we're worried about. And that would cause us to get more bearish. But right now, we're at a wait and see.
Is there something that we're going to get Fed minutes tomorrow? I don't know how much you closely follow that. Is there something that could be in those minutes that might kind of change your thinking a little bit when it comes to the investment environment?
The Fed crosstalk leads us to believe that there really isn't a consensus to go really quickly and go hard. So we think there's still enough dovish sentiment there to cause them to go slowly. I think it's mostly related to the labor numbers.
All right. One last question. Fixed income play. Is there any way you play the yield curve?
We're still short.
You are.
Pretty much on the short end, but we are looking to, with our forecast of possible recession in 23, you'll see us start to lengthen out because we won't want to stay too short too long.
All right. Really appreciate all your time today. Our drive to the close with Mace McCain, President, Managing Director, and Chief Investment Officer at Frost Investment Advisors, on the phone from San Antonio, Texas. They've got about $5.1 billion in assets under management. All right, just under, I should say, 3 minutes left in today's trading session. Bouncing around here, but we're going to finish probably off our highs of this session, but but still up about 1.5% on the S&P 500. We're looking at a more than 1% gain in the Dow Jones Industrial Average. And Tim, once again, we're seeing tech outperform today.
Yeah, it's remarkable to see the way that investors, at least on the equity side, are taking those comments from President Biden in stride, saying, hey, we're not concerned about possible conflict here.
Yeah, it's interesting, but also saying that they're keeping an eye on it, right?
Yeah.
And it certainly doesn't sound like we're out of the woods, at least not yet. All right, coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to that closing bell, here to help take us beyond the bell. It's our global simulcast partners, Carol Masser, alongside Tim Stenovic, bringing together our audiences across Bloomberg Television, radio, and YouTube. And Carol, we got a nice little rally here. It looked like we had some softness the last 3 days, some concerns here that people were starting to bail on this market, but I guess the buying opportunity has been found.
Yeah, and I feel like just a few minutes ago, we were seeing some buying into the close specifically. And this is less than a half an hour that we heard from President Biden talking about those geopolitical tensions between Russia, Ukraine, and the NATO allies, and saying that they'll, any kind of Russian attack against U.S. allies, the U.S. will act on it. But nonetheless, markets seem okay with what the president had to say.
Yeah, that's what I find particularly remarkable, because during those comments, we did see stocks in the S&P 500 dip a little bit, Caroline, but then recovered, and more than recovered, and hit session highs a few minutes later.
What's Bitcoin doing? Is that risk asset still on the higher side? I'm looking it up right now, because that has been, once again, something that's moving to the 4.5% higher. It felt like people were in the mood to be risk on today, even in the face of higher inflation as well.
Higher inflation indeed. I know that we've been talking about not only the high CPI print that we got last week, but the PPI print as well. And it is noticeable that there are different sort of inputs in terms of what goes in to calculate those. So it's not always a apples by apples comparison, but a PPI print that indeed is higher than expected. And the previous month's revisions were higher.
And I think so, and a good point about it not being quite apples to apples, but when you start to see those PPI costs go up, at some point you would think that gets passed on to consumers, and then it shows up in CPI. And so it just makes you wonder here. All right, we are getting the closing bells here on a very cold Tuesday afternoon here in New York. Remember like a few days ago, it was like 50 degrees outside?
It's going to be...
That's why I'm wearing the turtleneck.
Carol, who has a nice collection of turtlenecks here, are going to come in handy on this day. Here's your closing bells here. You're looking at a Dow Jones Industrial Average that's going to close higher by more than 400 points, about 1.2% on the day. Similar story for the S&P 500, up about 1.6%. The NASDAQ indices out front here to a certain extent, 2.5% here on the NASDAQ composite, similar for the NASDAQ 100. And look at this, the Russell 2000 getting in on the action. That's your outperformer on the day, closing higher, Carol, by about 2.8%.
Yeah, and let's not forget we're awaiting some earnings, so we'll wait for them to cross the Bloomberg. In the meantime, as I do my turtleneck tour, I do want to mention the S&P 500. I know Taylor's going to dig into those groups, but 401 names in the S&P higher today, 104 lower. So definitely a much more buy-in trade today here, Taylor.
And Carol, I really love that you mentioned earnings, because that actually is sort of the key debate, right? That reopening trade, if you're thinking about Wynn, if you're thinking about Airbnb, if you're thinking about autos, right? And these chip makers that are some of the best performers on the day, up about 5.9 to 4.5%. Technology as well, if we're thinking about this day at home trades. I know we're waiting Roblox as well, as we're thinking about staying home playing video games. So all of those earnings are going to provide us some relief here. But I have to say, mostly green on the screen. There are a few sectors that are down in the red. Energy really notable here. You're off about 1.6%, with crude markets falling as well. Otherwise, it's household products and food and beverage that seem to be the laggards on the day.
Well, we're getting some breaking news with earnings. Viacom CBS reporting just now that fourth quarter revenue coming in above expectations, $8 billion. Estimates were for $7.48 billion. Fourth quarter adjusted EPS coming in for continued operations, content operations coming at 26 cents. That was lower than expectations at 45 cents. We're seeing streaming revenue, though, beat expectations, a really important number for investors, $1.32 billion versus estimates of $1.26 billion. After hours shares are lower by about 3% right now. The big question, is this going to be more of a Netflix story when it comes to the streaming product at Viacom CBS, Paramount Plus, or is it going to be more like a Disney Plus story like we saw from last week?
I mean, when you're looking at a doubling, more than doubling of their subscriber additions from last quarter, a record 9.4 million additions, expanding their total global streaming subscribers to over 56 million. They're making inroads, but a lot of that growth potentially already factored into the market. And of course, this is all about content. Content is king. What are we going to see in terms of, well, I feel it's going old school. Beavis and Butthead. I mean, what are they also like?
Is this the Super Bowl all over again, where they're just trying to appeal to people who are exactly my age and go back to what happened in our childhoods?
Good reminder that we're all in our 40s and need to be talking about our retirement plan.
Oh my God.
Late 30s as well.
Yeah.
That's
All of us.
the Charles Schwab baby coming, or was it the E-Trade baby coming back?
E-Trade
Hey, what's
baby.
interesting is, though, Viacom CBS, if you check it out, folks, it is up, 19% this year. So, Caroline, I think you hit it right on the money that there was a lot of expectation ahead of these results, because it looks like the company is beating on a lot of metrics here.
Yeah, we keep a close eye on content. We keep a close eye on also, when you're looking at these sort of subscription models, what's going to be the likes of Roblox coming? I know, Romain, this is a company you keep a close eye on. What is the reopening trade? What's also the spending of companies? Because we're starting to see Akamai numbers coming out, fourth quarter revenue, $905 million, beating analyst estimates. The adjusted earnings per share, $1.49. The estimate had been for $1.42. So Akamai coming out with a beat. This is about getting your internet to you faster, of course, with this edge computing that they provide. And also, of course, a company that delivers cybersecurity. But I know we're also getting a consumer take, Taylor, with what's Wynn Resorts.
And with that reopening trade, frankly, the numbers look pretty strong. You have Wynn Resorts looking at fourth quarter operating revenue for Las Vegas, of course, $493.9 million versus estimates of $481.6. Operating revenue overall for the fourth quarter, $1.05 billion versus estimates of $997 million. And so, frankly, all the way down to the bottom line, also an improvement. Fourth quarter adjusted loss per share of about $1.37. Actually, I should say that is worse than the estimated loss per share of $1.27. So there looks to be something, Romain, going on within that income statement.
Yeah, we were talking about Roblox a little bit earlier. Those earnings coming out right now. And let's start off with the engagement, $10.8 billion hours of engagement on the platform. That's a little bit less than what the street was looking for. They were looking for about 11.9 billion. As far as active users, 49.5 million active users on that Roblox platform in the most recent quarter. Unfortunately, that's coming in light a little bit by 50 million was what the street was looking for. Shares down 17%, Carol.
All right, let's go to Airbnb, just crossing the Bloomberg terminal. The stock's already up about 3.3% here in the after hours. Fourth quarter revenue, it's a beat, folks, $1.53 billion. The estimate was for $1.46 billion. And we're getting the outlook. And this is important as the world tries to reopen with the pandemic. Sees first quarter revenue of $1.41 to $1.48 billion. That is definitely above the street estimates of $1.22 billion. As for fourth quarter EPS, it too was a big beat, 8 cents versus the 3-cent estimate. So that was outperformance by a nickel. And again, that stock is up more than 5% in the after hours. Mandeep Singh follows this company for us here at Bloomberg Intelligence. Mandeep, it looks like it is hitting it out of the park here, because that stock is really rallying in the after hours.
Absolutely. And, given the setup, you had Omicron affecting travel, and, you may have thought that cancellations would have played a part in terms of bringing down that number or the outlook, but that didn't happen. And look, this is a company that has got scale when it comes to marketplaces and a very clean business model. We were talking about Uber and Lyft last week. Look, here is a company that can easily, double in bookings over the next 3 years, has a very healthy EBITDA margins, and really it's a consolidated market when you think about it, so there is no price war going on, and I think investors like that kind of stuff.
So when we talk about sort of the year-over-year increase that we've seen in gross bookings, 20% or so here, is that just kind of the pandemic effect, or is there more of a longer-term trend that we're looking at here?
Yeah, well, there is clearly a lot of pent-up demand here, and that's going to drive, this bookings growth, room night growth for in my mind, at least the next 2 to 3 years. So this is not going away anytime soon. And also what they've done is the long duration nights. What's really drove the top line is how they have, scaled
on that trend.
Well, the fundamental difference between Airbnb and all the hotel chains is Airbnb has got, 100 times more supply. So Marriott, if it has to boost supply, has to spend a lot of capex in terms of opening another hotel, adding rooms. This is a marketplace business, and they get all the supply without spending $1 on supply acquisition. So just the beauty of the business model here showing.
I'm all about the Airbnb experiences as well. Who doesn't want an online cocktail? Mandeep Singh, thank you, Senior Technology Analyst for Bloomberg Intelligence. Be sure to catch up with a key conversation. Airbnb CEO Brian Chesky, he's joining Bloomberg TV at 7 p.m. New York time on Bloomberg Daybreak Asia. Remains some running through of Roblox.
Yeah, Airbnb shares one of the biggest movers to the upside here. One of the biggest decliners post-market is Roblox, down about 14% right now. The bookings came in higher than expected. They were up about 20% year over year here. But you had a bit of a miss here with regards to the daily active users, which was coming in at about 49.5 million. The street was looking for 50 million. Hours engaged was also slightly lower than expected, despite the fact that they rose year over year here. They're not really providing much in terms of a forecast here. We're probably going to have to wait till we get to the call, Carol. But right now, when you look at the trend and the idea that this was a company that had benefited so much from all of us being locked at home and playing these games, a lot of people thought that this would persist post-pandemic, particularly into the metaverse, but at least for right now, at least out of these fourth quarter numbers, that doesn't appear to be the case.
Right, we're being reminded of what normal is, right? What a non-pandemic world is. Let's just point it out. Viacom CBS is down about 1.5% in the after hours. Wynn is up about 1.5%. You mentioned Roblox. We're seeing that selling off big time, about 15% to the downside. And Airbnb, definitely one of the outperformers here in the aftermarket, up almost 8%. All right, that's going to do it for our cross-platform coverage on radio, on TV, and on YouTube. We will see you again, same time, same place, tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic, a bunch of earnings for us to play around with tomorrow.
Yeah, and even continuing right now, Viacom CBS shares down about 1.8% in the after hours. We're going to dig into that in just a few minutes. In the meantime, though, let's head to Washington, D.C. for a check of the latest world and national news. There we have Nancy Lyons standing by with an update. Hey there, Nance.
Thanks, Tim. President Biden says so far there's been no evidence that Russia has pulled back its troops along the Ukrainian border, as Vladimir Putin referenced earlier today. So the U.S. and its allies continue to plan for an invasion, with Biden saying if Russia moves across the border, the Nord Stream 2 pipeline will not happen. Biden admits an invasion could impact the price that Americans pay for gas, but he says defending democracy and liberty is never without a cost.
We're coordinating with major energy consumers and producers. We're prepared to deploy all the tools and authority at our disposal to provide relief at the gas pump. And I'll work with Congress on additional measures to help protect consumers and address the impact of prices at the pump.
Biden also spoke to the Russian people, telling them they are not our enemy. Well, the Pentagon plans to toughen oversight of mergers among defense contractors.
The Defense Department says substantial consolidation among suppliers is a threat to national security. The Pentagon outlined a series of recommendations to combat what it said was 3 decades of mergers and acquisitions among contractors, leaving the Pentagon relying on just a handful of companies. The initiative stems from a Biden administration order last year for government agencies to tackle consolidation that the White House says is harming innovation. In Washington, I'm Amy Morris, Bloomberg Radio.
Prince Andrew has reached an agreement to settle claims that he sexually assaulted a teenage girl decades ago. This is according to a court filing. Virginia Giuffre had claimed that the British royal was one of several men to whom Jeffrey Epstein lent her for abuse. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So a bunch of earnings after the close. We're getting different reaction. Wynn Resorts, it's down about 2.9% here in the after hours. So investors certainly sending that stock down. It'll be interesting, too, on that call to see about gambling during the Super Bowl. Yeah. Fourth quarter adjusted loss was $1.37 versus an estimated loss of $1.25. So that loss a little bit steeper. And operating revenue also, that actually came in a little bit better. Operating revenue was $1.05 billion versus $997 million. You want to talk about
Viacom CBS shares down 1.8% in the after hours. As Caroline, I think, mentioned correctly, a lot of the gains in streaming were priced in ahead of this, considering how well the company's stock has done so far this year.
Up
but
19% so
yeah,
far.
But still down significantly from those March highs last year. The company's saying that fourth quarter global streaming subscribers adds 9.4 million, and then streaming subscribers are now over 56 million. The company also announcing a slate of new content as well. to appeal to, I think it's fair to say, elder millennials and Gen X.
It's like, what are they called? What are you called?
Elder millennial.
Is that what it is?
Yeah.
Elder millennial. I love
Geriatric
it.
millennial, if you want to be rude about it, but that's fine.
I
Hey, should
never
we
went
talk
through it.
Airbnb?
Well, I do also want to mention Roblox because
Okay.
it's down about 13% here in the after hours. I know Romain was mentioning it. Fourth quarter daily active users was a little bit light, 49.5 million versus an estimate of 50. Fourth quarter hours engaged, this is a key metric. How much people are engaging on the platform? 10.8 billion, that too is light, 11.19. And then let's go to Airbnb because that stock's
Yeah.
up almost 8% in the after
Yeah,
hours.
it's a fascinating story with Airbnb. The company sees first quarter revenue coming in 1.41 to 1.48 billion. Carol, as you mentioned, above the street estimates of 1.22 billion. Fourth quarter revenue coming in for the year, for the last quarter, I should say, up to 1.53 billion, beating estimates of 1.46 billion. I think, though, digging into the press release and seeing the way that people are using Airbnb differently as a result of the pandemic is the most interesting part. They are staying, 175,000 guests stayed for 3 months or longer.
1 in 5 nights booked were for stays of a month or longer, so that says a lot. That stock definitely rallying in the after hours. All right, you're listening to Bloomberg Business Week. More on CBS.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Airbnb beat revenue and profit estimates in the fourth quarter, benefiting from remote work policies and vacation demand that boosted short-term rental bookings despite travel disruptions caused by Omicron. After hours, shares of Airbnb up by 5%. Roblox shares, they are tumbling 12% in extended trading. It reported bookings that missed analyst estimates in the fourth quarter, reflecting a retreat from the pandemic-inspired boost over the last 2 years. It was an up day on Wall Street. In fact, we closed at or near session highs for the Dow, the S&P, and NASDAQ. S&P up 69, up 1.6%. Bonds fell with the dollar as speculation that geopolitical tensions could be easing overshadowed this morning's data showing inflation still running hot. The Dow up 422 points, up 1.2%. NASDAQ up 348, up 2.5%. 10-year yield 2.05%. Spot gold down 1%, $18.52 the ounce. And West Texas Intermediate crude down 3.7%, $91.93 a barrel on WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we're watching shares of Viacom. They're now down about 2.2%, 2.5% in the after hours. They just crossed with their earnings. Let's get more on the quarter and the media sector more broadly. Here to do that is our go-to voice when it comes to all things media, Geeta Ranganathan. She is technology and media analyst at Bloomberg Intelligence. She's on the phone in New Jersey. So is it all about the streaming, or what is it, Geeta?
Hey, Carol. Yeah, Thank you so much for having me. Yes, it is now. Media is all about streaming. It's always about the streaming subscriber numbers. And we saw actually Viacom CBS post some really pretty strong, impressive numbers. We had consensus for about 6.5 million new subscription additions for the fourth quarter. They actually kind of blew it out of the park. They came in with more than 9. So pretty impressive, pretty strong numbers on that front.
So this is more of a Disney Plus story than it is a Netflix story?
How did you do, right?
Yeah, because, I mean, look, it was a tale of two different streaming services this in the most recent quarter, wasn't it?
Yeah, it definitely seems that way. I think what we've seen is, I think after Netflix, I think also kind of mismanaged it a little bit. And I think, Disney and all these other companies, I think, have kind of got a much better handle on how to kind of manage expectations. But I think across the board, even Netflix actually posted a pretty strong fourth quarter. It was really just their guidance for the first quarter, which was extremely disappointing. None of these companies, of course, have given us any guidance for the first quarter, although Disney did say that, they're going to have a slightly a weaker, first calendar quarter as well. But definitely, yeah.
Geeta, also crossing the Bloomberg, Viacom CBS to change its name to Paramount. So, speaking of, Tim and I...
of Top Gun.
All right, can I just say, Tim and I were joking. So what happens when they break up? Is it one company's Para and one company's Mount? Because we know what happens with Viacom CBS.
It's been a messy marriage.
Does this just stress streaming and they're just putting it out? What does that say to you?
I mean, I think to me, it's really now becoming all about brand name. And they've got some pretty good traction with their Paramount Plus streaming product. I think it all comes down to where the content engines are. And for them, it's the Paramount TV studio and it's the Paramount Film Studio. Those are the iconic properties for them. And if you just kind of see, right now, it's just this content arms race in Hollywood. And they know they've got some really valuable properties in those two studios, and that's kind of driving the streaming service. I think it kind of makes sense for them to really kind of have everything under the Paramount umbrella.
Hey, Geeta, what happens when you have big tentpole productions? I'm talking Top Gun, like the new version of Top Gun. That is not something that is going to end up on Paramount Plus or whatever they call the streaming service, right? This is something they want people to go to theaters for. So what is the model when we learn that, Disney's success with the streaming platform versus releasing in theaters, it really works well for some titles?
Oh, absolutely. And I think that's what we're seeing across the board now, Tim. So when you have these big tentpoles or the big budget blockbusters, yes, you are going to release them in theaters first. Absolutely. That's where you're going to make majority of your money.
Unless it's Encanto, right?
Yeah, exactly. But here's the thing. So when it comes to like family fare, especially if it's like younger kids, And Paramount actually did a very similar thing with Clifford the Big Red Dog, which they actually released on Paramount Plus, kind of a straight-to-streaming release, or rather, I should say, a day-and-date release. And it actually did really well for them on that platform. So they're kind of picking and choosing and seeing which films would play better with a day-and-date strategy as opposed to an exclusive theatrical release. But the reality of the situation is that the theatrical window has come down dramatically. So it's come down from about 3 months to about 1.5 months right now. And that's true for all Paramount films as well as Disney films.
Geeta, kudos to you and your team, because I'm looking at your research report that you guys had put out. And you said Viacom CBS has the chops to top on subscribers, which is exactly what they did. But you do ask, what's the cost of it all? I have to tell you, I'm getting overwhelmed by the amount of streaming services that we now have. We've now traded the cable bundle for the streaming bundle. At some point, there has got to be some consolidation or fallout. Do you guys see it that way? At some point, people are going to be, especially as they get back out into the world post-pandemic, they're going to start paring back on some of their services?
Oh, absolutely. We're going to go back to a world where we're, I think there's going to be a great rebundling after all of this, where, people are going to get some kind of a hybrid mix of both the cable bundle, some pared down version of the cable bundle, because you need your sports, you need your live news, but you also need a couple of these streaming services. And so the question is, how many streaming services really can you afford, and how many can you actually watch? And so, our view is that, unless there is some kind of a consolidation, especially with some of these lesser known services, even though Paramount Plus has done extremely well, a Paramount, a Peacock, I'm not so sure they can go it alone after 2 or 3 years.
So what does that bundle look like, Geeta? Does it look like it's a bundle like Apple has done, or does it look like it's a bundle like not a cable provider, but maybe a wireless provider like Verizon, AT&T, T-Mobile? What does it look like?
Yeah, I think what they're going to do is, and it could be any of these. It could be an Amazon, it could be an Apple, that kind of takes, some of the live TV channels, but then adds on, a few of the must-have services. And the question really then becomes, which are the must-have services? And we know it's probably going to be Disney, Netflix. It's probably going to be Amazon Prime. There's probably going to be the Discovery HBO, which kind of features right there on top. And then the question is, do you have then this kind of catch-all for all of these other smaller niche services?
You are a gem. You're our go-to. Geeta, thank you so much. Have a great night. Geeta Ranganathan. She is technology and media analyst at Bloomberg Intelligence. Shares of Viacom down 3.2%. The company's shares will trade on the NASDAQ as PARAA. That's the Class A common. Just so you know, because the new name is not Viacom CBS. It is
Paramount.
There you have it. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So how are you at predicting the future?
Well, I didn't get in on crypto early. I feel like this is one of those. I feel like this is like Larry David in the Super Bowl ad, right?
Yeah, exactly. Exactly. All right, we're going to talk with Amy Webb. She's the CEO of the Future Today Institute, really talking about the next frontier, and that is synthetic biology.
I'm really good at looking back on things.
Aren't we all?
Okay, history.
Aren't we all?
Well, let's look back on the markets and get an update of what happened today. Here's Charlie Pellet.
Thank you very much, Tim. I knew Carol was going to ask that question at 4:31 Eastern Time.
In your crystal ball, man.
Exactly. The Dow, the S&P, NASDAQ, all moving higher today. The Dow gaining 422 points, up 1.2%. S&P up 69 today, gain of 1.6%. NASDAQ higher by 348, up 2.5%. As Tim said, though, that's looking back. Let's look at earnings after the bell. Airbnb beat revenue and profit estimates in the fourth quarter. Mandeep Singh is senior technology analyst with Bloomberg Intelligence.
There is clearly a lot of pent-up demand here, and that's going to drive, this bookings growth, room night growth for in my mind, at least the next 2 to 3 years. So this is not going away anytime soon.
After hours, shares jumping 4.7%. Airbnb benefiting from remote work policies and vacation demand that boosted short-term rental bookings. After the bell, Viacom CBS reported adjusted EPS from continuing operations for the fourth quarter that missed the average analyst estimate. Shares down by 3.5%. By the way, changing its name to Paramount. Stocks higher today. Bonds fell with the dollar. A speculation that geopolitical tensions could be easing overshadowed data showing inflation is still running hot. Year to date, though, the S&P remains lower by 6.2%. Mace McCain is Chief Investment Officer at Frost Investment Advisors, and he was our guest right here on Bloomberg Business Week.
I think by mid-year we'll be looking better on the market. The odds of the Fed going 25 or 50, I think, are about equal now. It could be either. But I just don't see the Fed getting overly aggressive when we still have employment numbers below where we started. We still have 2.5 million people that we're trying to get into the workforce.
10-year yield right now, 2.04%. Spot gold down 1%, $18.53 the ounce. West Texas Intermediate crude down 3.7%, $91.90 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. This is Bloomberg Business Week. Carol Masser, along with Tim Stanovic in our Interactive Brokers Studio, Bloomberg Interactive Brokers Studio on this Tuesday. So you might recall an article in Barron's last year, Tim. It was about synthetic biology possibly being the next big thing, and proponents of it saying, quote, the total addressable market being over $1 trillion. That's at least according to the report.
What does it look like? When do we get there, and how do we get there? Amy Webb is the CEO of the Future Today Institute. She's also a professor of strategic foresight at the NYU Stern School of Business. She's the co-author of the new book with Andrew Hessel, The Genesis Machine, Our Quest to Rewrite Life in the Age of Synthetic Biology. She joins us on the phone from New York. Amy, how are you?
I'm great, Tim. Thanks for having me. Hi,
Well, in case anyone missed that Barron's article from last year, let's start by defining synthetic biology. What is it?
You got it. So synthetic biology is an emerging area of science that effectively involves redesigning organisms to have useful purposes by engineering them to have new abilities. And it can range from, messenger RNA up to new types of organisms and even resurrecting a woolly mammoth, believe it or not.
It is pretty remarkable. And if you think about things that could be transformative, right, in our world, this is one of those things. Where are we, though, in this process where it really starts to impact our world? I did come across in reading in, I know Tim and I are reading in and preparing for this segment about, investor dollars and investor attention increasingly looking at this space.
That's right. I mean, in the last decade, investors have put around $26 billion by my count into synthetic biology startups. And depending on who you talk to, the current products that are in being created right now, they could generate anywhere from $1 trillion to around $4 trillion over the next decade. I say this, however, noting that we are on a very long trajectory with this technology. So I want to drive home the point that this is the beginning. We are nowhere near even the middle of all of this. So right now, investment is really going into the infrastructure and the companies building out the processes and the tools. It's way too early to start investing in end products.
Right. So we've got to think in maybe a 10-year, 20-year time frame, perhaps even longer. But I do wonder, do you liken it? Is it akin to some other transformative innovation or technology that we've seen over the last 100 years?
Absolutely. So I think that the best way to think about this, believe it or not, is the early days of the telephone. And when Alexander Bell went on stage upstate New York at Chickering Hall and debuted this new crazy device he had made in a wooden box, nobody believed him. It was so shocking to people to hear this voice come out of the other end that they flooded the stage and demanded to see behind the curtain, assuming that somebody was back there. When they realized it was new technology, it was absolutely earth-shattering. But it still took a little bit of time to get from that demonstration on the stage to transatlantic, wires. That being said, within the first couple of decades, there were telephones, there were lines, drawn, there were the beginnings of satellites being thought about. And all of these years later, there's actually no way to put a true valuation on what that telephone spawned, which includes, satellite technology, internet technology, TikTok, the ability for us to do what we're doing right now. Austin Goolsbee and a couple of other economists said that the only real way to measure the impact of all of this is to do it in the reverse, to start taking things away. I think we are going to look back at this moment in time as the Chickering Hall stage of synthetic biology. And in the mid-future, it's going to be hard to figure out what the actual valuation is, similarly. Wow. And I think it's going to happen at obviously a much faster clip. So the advent of the telephone.
Yeah, that's fascinating considering, dial-up wasn't even that long ago in the greater history of the telephone. And look what we're doing today through the internet. Amy, I'm wondering about investor exposure here, and we only have about 30 seconds left. But what does our audience need to know about where they can actually get in on the, get in early when it comes to synthetic biology? We have 30 seconds, and then we're going to come back with you for more time.
You got it. There are some ETFs out there, BlackRock, Arc Capital Management, some others, Franklin Templeton. Their ETFs they exist. They're performing better than expected, although I'm not specifically giving investment advice. And there are IPO deals happening all the time. The median size of synthetic biology IPOs is rising. It's valued about twice as much year over year. So I think it's a matter of just poking around and seeing what looks safe and comfortable.
And maybe we'll poke a little further in terms of, the catchwords or the developments or the established companies that need to be on investors' radar when it comes to the development of the synthetic biological space. We're going to come back with Amy Webb, CEO of the Future Today Institute, and continue talking about her book, The Genesis Machine.
Well, let's head to Washington, D.C. now and check in with Nancy Lyons. She's standing by with the latest when it comes to world and national news. Hey, Nance.
Thanks, Tim. President Biden says he and Russian President Vladimir Putin have both expressed a desire to continue diplomacy, but he's not convinced that Putin has put aside his intention to invade Ukraine. Bloomberg's Irv Chapman has the latest from Washington.
The president noted the Russian statement that some troops are being withdrawn from their positions threatening Ukraine.
That would be good, but we have not yet verified that. We have not yet verified the Russian military units are returning to their home bases. An invasion remains distinctly possible. To the citizens of Russia, you are not our enemy.
The president said he's put specific security proposals on the negotiating table, but the North Atlantic allies are prepared at the same time to make further aggression costly to Russia. In Washington, Irv Chapman, Bloomberg Radio.
Republican senators have been successful in preventing a planned vote today on President Biden's 5 nominees to the Federal Reserve. Senate Minority Leader Mitch McConnell says they have major reservations about the woman that Biden has selected to serve as vice chair of supervision.
This slot comes with major unilateral power, but the president's nominee, Sarah Bloom Raskin, has spent recent years pressuring the Fed to stop being a neutral regulator and instead become an ideological left-wing activist body.
Senator Mitch McConnell, the vote has been delayed because Republicans said they wouldn't show up, preventing a quorum. The Super Bowl scored a big win with viewers. Just over 100 million people watched the Los Angeles Rams defeat the Cincinnati Bengals, an 8% increase from last year's game. It also ranks as the most watched broadcast in 2 years. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in D.C., Carol Massar and Tim Stenovic here in New York in our Bloomberg Interactive Broker studio. Nancy, just talking about the Super Bowl audience. You and I were both part of it.
Yeah, we were two of the 112.3 million people who watched the Super Bowl on various outlets. That's a 16% jump from last year's diminished viewership. Some 99.2. Okay, so it matters where people watched. Okay?
Correct.
So where did you watch, by the way, at home?
On home, on a TV.
On
normal,
like
linear.
A normal, linear.
Yeah.
Okay, so I actually watched
NBC.
So I started watching it before we took off. I was on
right,
the ground in Arizona. I started watching it on the Peacock app, like using my phone as, to tether my iPad to the internet. But then that stopped working when we got into the air, and I was able to switch over. I was flying American Airlines that time, and they have free TV through the app. So then I watched like a normal TV broadcast, but it's pretty cool. I mean, I know it's 2022, but it's still pretty cool. You can watch live TV while you're on an airplane.
We're going to feature in the weekend show of Bloomberg Business Week on Bloomberg Radio in our podcast. But I sat down with George Pine and Jimmy Pitaro of ESPN. We heard a little snippet yesterday, but we talked about where the fan is, meeting the fan where they are, and basically the multiple platforms, whatever it may be, to make sure that you're getting fans wherever and however they want to watch. Because it's not like, we grew up with our parents and it was like destination Saturday, Sunday night, or Monday Night Football and stuff. That's not how it plays.
Yeah. Well, let's talk about where some of these numbers were, Carol. So 99.2 million people viewed the game the way you did on NBC. 1.9 million people on Spanish language sibling Telemundo. 11.2 million on streaming services such as Peacock, which is how my wife and I watched it, at least before I took off.
Yeah, and last year the big game drew an audience of 96.4 million TV and digital viewers on CBS, which is a unit of Viacom CBS, now Paramount, as we know. But it's really interesting. It's also a sign of the NFL. Man, people were watching this season, and to see that the viewership was also up. That content, we know Amazon's into, like everybody is buying pieces of that content.
Okay, was it because Bagels and Rams? Was it because of who was in the Super Bowl?
There were good playoff games, really close games. I think people were engaged. Who knows? I don't know.
But it worked.
It did work. You're listening to Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the closing bell. Viacom CBS says Paramount Plus ended last year with 32.8 million subscribers, a sign that the streaming media company, or the media company, is starting to benefit from its growing investment in streaming. By the way, also changing its name to Paramount. Shares right now down by 3.9%. Airbnb was benefiting from remote work policies and vacation demand that boosted short-term rental bookings despite travel disruptions caused by Omicron. After hours, Airbnb up right now by 4.37%. Stocks climbed today, bonds fell with the dollar as speculation that geopolitical tensions could be easing overshadowed data this morning showing inflation is still running hot. 10-year yield 2.04%. S&P up 69, closing at just about the best level of the day, up 1.6%. The Dow up 422, up by 1.2%. Nasdaq up 348, up by 2.5%. Spot gold down 1%, lower by $18 the ounce to $18.53. West Texas Intermediate crude down 3.6%, $92.02 for a barrel of WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest, still speaking with Amy Webb. She's the CEO of the Future Today Institute, professor of strategic foresight at the NYU Stern School of Business. Her new book, The Genesis Machine, Our Quest to Rewrite Life in the Age of Synthetic Biology. So, Amy, we've been talking with you about, this is a developing thing. This is got a little bit of a long trek before it really plays out. And having said that, there are some ETFs and some investment vehicles for folks to play it. But I always think about when this kind of trend is happening, what are the established companies and also the catchwords, for the development of synthetic biology that you think our audience should be aware of?
Right. So again, I think that the thing to bear in mind is not just to focus on the products or the end outputs of all of this, but also the companies that are building all the infrastructure, and there are a lot of them. Twist Biosciences is an incredible company. And I should note also, I don't have any investments in any of these companies.
Appreciate that, yeah.
Twist is led by an incredibly smart team of people. They're building, sort of they're the picks and shovels, right? They're building the infrastructure that everybody else relies on. Ginkgo Bioworks is another really smart company.
That's one Kathy Wood talks about a lot.
Mm-hmm. Yeah, and she's right. They are very smart. They're also very mission and purpose driven, which I think is going to help them out the further out into time this goes. They're really thinking through next order impacts, which I think is super smart. But you can also take a look at outside of the United States, companies like BGI. In 2006, it cost about $14 million to create to sequence a high quality draft of a human genome. That price dropped to in 2015 to around $4,000, and now BGI can sequence a genome for about $100. That's less than the price of a pair of Nike Air Jordans. So there are a lot of different companies in the space.
Hey, Amy, I'm wondering about helping us understand what, if we think about it from, like we talked about earlier, the evolution of the telephone to, TikTok and what we do on our phones now. What happens during our lifetimes? What's a realistic way for us to think about what type of developments we see in the synthetic biology space in the next 30, 40, 50 years?
Well, I can bring us even closer to the present day. Before the break, you were talking about the Super Bowl. Americans ate around 1.45 billion chicken wings, which is a lot of chicken wings. It creates a lot of problems for their environment, and it's not so great for the chickens. There's a company called Eat Just, and they are already producing cellular-based chicken. So this is not stuff made out of soy. This is chicken meat that started out as a stem cell. Was put into a bioreactor with amino acids and all the other goodies that meat required to grow as it would inside of an egg. And the output of that is edible meat that never had hormones or antibiotics or any of the other stuff that you might find on a commercial farm.
Have you tried it?
I have tried it.
How is it?
And it's great.
Tastes like chicken, as they say?
It tastes like chicken. Well, chicken doesn't really taste like chicken, though. I mean, like modern-day chicken is so overprocessed. Yeah.
And those wings, right? Those taste like buffalo sauce.
Right, exactly.
But it isn't. But it is interesting. You talk about lab-grown food. Like we keep talking about plant-based being a solution, but most people would argue that it isn't necessarily a solution when it comes to the impact on climate change and just the ability to feed the world. And we've done some segments on our air that looks at kind of lab-grown food. And I think was it in Pursuits? Was there something?
Yeah, there was recently.
In Bloomberg Business Week in Pursuits about lab-grown food. I mean, is that what you're thinking, and that's where this potentially goes?
Well, yeah, the price has dropped pretty significantly since we first started talking about this when Maastricht Meats, which I think was like 2013, made that $250,000 hamburger patty. We've come a long way. And I think, it's highly probable that sometime in the next 5 to 6 years, the freshest sushi you will ever eat is going to come out of a bioreactor in Lincoln, Nebraska, rather than from a fisherman, off the coast of Japan, which is pretty exciting because it reduces our reliance on the cold chain. It shortens the supply chains pretty drastically. It's better for the environment. You can scale it. I mean, a small country like Singapore could reduce its reliance on, and they eat a ton of chicken. It could reduce their reliance on importing from other countries, right? They could produce what they need on the island.
So I guess one thing, anytime I hear a lab being introduced into a process, my parents were always like, close to, we had our own little gardens, picked our string beans and our lettuce, and,
You didn't have your own lab?
We did not have a lab. It was just you pick it and you put it in your mouth or wash it and put it in your mouth. So I do wonder about, what's the nervousness or the concerns or the anxiety we need to have about this, especially when you start to think about genomics, synthetic biology involved in, I don't know, babies, and where's the things that we need to be concerned about here?
Yeah, I mean, there are a lot of risks, so I'm not going to sugarcoat it. I would say that the first and foremost, one of the biggest risks has to do with misinformation. We are barely getting out of this pandemic with people being able to talk about messenger RNA, and we just didn't have the vocabulary pre-pandemic to have that conversation. This stuff is going to make messenger RNA look pretty basic. So we're going to have to figure out a way to come to the table and have reasonable conversations so that we don't immediately catastrophize the really terrific science that's in the process of being born. Now, aside from that, we do have some serious challenges. One of those, weirdly enough, has to do with IP. We don't really have regulatory frameworks that both incentivize the research and the end products. It's sometimes very murky who's in charge. And there are some questions around IP, and if you write source code for new forms of life, but it's a live thing, like who gets the IP for that? And if we've decided to perform a genetic surgery using embryos and altering their code, does that sequence in some way become owned by the company that performed that genetic surgery? I know this stuff sounds like the Star Trek future, but in reality, we're already seeing those problems today. And I've got one quick example. One of the smartest researchers in the space is Craig Venter.
Yeah.
And they've been working on minimum viable genomes. So when researchers do this, they tend to digitally watermark. And it's just a way of noting what's organic, like what nature did versus what human researchers did. Long story short, they embedded a bacteria with a quote from a James Joyce work, a portrait of an artist of a young man.
Right.
It's to live, to err, to triumph, to recreate life out of life. And turns out the Joyce estate is super litigious. And they were not happy that their work got embedded into a bacteria without written permission. But there's no way to send a cease and desist to a bacterium.
That is, oh my God.
We've heard of space law. What about,
synthetic biology?
Synthetic biology law, exactly.
You definitely piqued our interest. So much fun. Amy, thank you so much. Amy Webb, she's CEO and founder of the Future Today Institute. Her book, check it out, The Genesis Machine. All right, what a day. For Tim Stanovec and the whole Bloomberg Business Week team, I'm Carol Massar. Have a good and safe evening.